Most investors chase flashy sectors like tech or pharma. But here's a surprising fact. Without bearing, the wheels of India's economy simply stop turning. In this hidden corner of the market, there's one company that quietly powers railways, metros, factories, wind turbine, and even your cars. That company is Timken India. This stock has already created a massive wealth for the long-term investors. But the big question is, can it keep rolling ahead, or is the speed bump closer than we think? In this video, we'll discuss business model, financials, outlook, and technical chart pattern. And trust me, you do not want to miss what's coming. So let's jump into it. Timken India is a subsidiary of the Timken Company USA, a global leader in engineered bearing and industrial motion product. The Indian arm manufactures wide range of bearings including tapered roller bearing, cylindrical bearing, and other precision components that are essential for industries like railways, automotive, steel, power generation, construction, and so on. Here's the quick history. Timken India was originally incorporated in 1987, a joint venture between Tata Steel and the Timken Company. The Jamshedpur plant was started commercial in 1992. During that time, Tata and Timken each held 40% stake. But in 1999, Timken acquired Tata's entire stake and the company was renamed Timken India Limited. The bearing industry is often called as backbone of manufacturing and mobility. Every industrial machines, railway wagon or a wind turbine needs bearing. India's infra push, rail modernization and energy expansion create a long-term demand. On the global side, there is a twist. Timken faces some export headwinds from the US tariff in the range of 15 to 25%. Management clears that in the latest con call, tariffs are a speed breaker, not a showstopper. To eliminating the risk, the company is diversifying export into Australia, Europe, South Africa and Asian market. While export faces challenges, domestic growth story remains intact. Now let's discuss capacity expansion and a new project. Timken is investing heavily in new capacities. First one is Bharuch plant. A new cylindrical roller bearing line is operational, with more lines coming up. Management targets 45 to 50% utilization by year end. Initial production is already being built for the export. Second one is Jamshedpur plant. 120 crore is being spent to expand railway bearings, especially sealed CTRBs for the freight wagons and locomotives. Third one is plain bearing. A new line with the 35 crore capex is coming up, expected to start next year. Fourth one is parent portfolio expansion. Timken may also roll out non-bearing products in India like lubricant system, chains, belt, couplings, linear motion solutions, opening up fresh growth avenues. So Timken is not just betting on bearings, it is also diversifying its product portfolio. Now I'll discuss financials. On the TTM basis, the company reported a revenue of 3,173 crore, which is almost highest ever, with the operating profit margin of 19%, which shows the strong performance, while the net profit, which is also the solid numbers and highest ever of 455 crore, which is good as compared to its peers. And the balance sheet tells an equally powerful story with the zero debt, which means that they do not need to pay any interest. Instead, it enjoys the financial flexibility to channel resources into expansion and future growth. In short, the numbers paint a picture of a company that is not just stable but also perfectly positioned to scale further. From the valuation perspective, Timken India trades at the premium level as compared to its peers, and it is because of strong margin, technology edge and global percentage. Currently, company command a PE of 47, which is almost equal to the industry PE, and below of 5 years median PE of 61. If you look at the outlook, management's tone in Q1 FY26 con call was cautious but optimistic, export faces tariff risk, but domestic demand from railways, infra and the renewable energies remain strong. Margin can bounce back about 20% once new plant scale up. Capex of 150 crores in FY26 reinforce confidence in long-term demand. In short, Timken India looks like a steady compounder, not a flashy. Now I'll discuss technical chart pattern of Timken India. From COVID lows to September 22, Timken India was not just moving, it skyrocketed nearly 370%. The stock even touched a lifetime high of 4,700 rupees. But here's the twist. Since then, for the almost 3 years, the stock has been stuck in a consolidation phase. And the reason is the numbers tell the story. Over the last 3 years, sales have grown at a healthy rate of 13% CAGR, but the price action has not broken out yet. On the technical side, the stock was even shaping up a reverse head and shoulder pattern, but that setup was broken recently. So now the big question is, what's next from here? Please let me know your views in the comment below. Please take this setup as a study purpose. This is not a buy sell call. What do you think? Can Timken India keep rolling forward as one of India's industrial compounders? Let me know your views in the comment below. If you found these analyses helpful, please hit the like button, share it with your friends and subscribe to Trading with Hariom for more in-depth stock analysis. And please let me know in the comment below which stock you would like me to next analyze. We'll back in next video. Till time, happy investing.